Why is it that words like reconciliation are terrifying when you're first starting out bookkeeping? You guys, my name is Rachel Brown. This is Realistic Bookkeeping. This is the third video in a short series on the basics of bookkeeping. My goal today is to try to take away some of the fear and anxiety that a word like reconciliation might bring to you. I started bookkeeping a little over a year ago, maybe closer to a year and a half at this point. And as I'm learning all the tricks of the trade and becoming more and more of a professional in this arena, I'm trying to share all that knowledge with you in a way that is helpful, efficient, succinct, and that you can use it to grow your confidence as you do your bookkeeping business. We are going to get into the word reconciliation, what that action means as a bookkeeper. I'm going to try to show you small examples of how that works, but if in this video you feel like it would be helpful for me to really walk through a reconciliation on camera with you, please go down in the comments and leave me that note. The more and more that I hear from you all, the more videos that I can make that are directly helpful to you. And that's really what my goal is. My goal is to provide that content for you that is not just filler space on my YouTube channel, but really reaches directly to you and helps boost your confidence. Like I said, I started this a year ago and I had many times where imposter syndrome was very, very real. I'm actually meeting with a client this afternoon. Still feel the imposter syndrome, right? It almost never goes away. Probably should make a video on that one if we're being honest. I did quit my full-time job to be a bookkeeper and Lord knows I had the imposter syndrome then. So in this video, I'm gonna kind of talk about some of the vocabulary words you need to know around reconciliation and just a very basic introduction to what it looks like so that when you go to do it on your own, you feel ready. Okay, let's jump in. I also forgot to mention that there's still the waitlist down below for everything bookkeeping. This is a course that's really focused on taking you from the very basics of accounting through building your bookkeeping business. I am not the owner of everything bookkeeping, but a dear friend of mine is working on it, and I think it's going to be a great course and a very affordable course if you're looking for one. So you can just pop down there. No strings attached. You can just put your name and email address in and we'll update you when the course is ready and published. So let's get into bank reconciliation, the basics. Bank reconciliation is very literally about matching money. So it's not about paying out money and it's not about receiving money, but matching the money that is in your accounting software with what's on the bank records. So reconciling bank accounts is the process of matching the bookkeeping records you've created, specifically what you've put in to the accounting software, with what has posted in the bank records. Literally, if you were to go to the bank account, what has posted there, what records they have. This normally happens on a monthly basis and is key for verifying transactions are accurate. It's also important for verifying that things have cleared the bank as they should have. And so here's an outline of what a reconciliation is going to take. Over here, you're going to see the things that you're going to need. And, you know, there are very specifics of what you need for reconciliation in order to begin. The very first specific piece of information you need is the ending bank account balance. What is the balance for the end period of where you're reconciling to? And you're going to need the date that you're reconciling through as well. So if this is a month end, then that would probably be the 30th or the 31st of that month. Whatever the end date is the date that you're reconciling through. And you'll also want the exact bank account amount on that day. And you are very literally, when you go to start your reconciliation over here, you're going to enter that ending account balance and date. You won't be able to start without it. You're also going to need the bank statement, and that can be a paper copy or a digital copy. We'll talk about the digital version in a moment, but we're going to need that for the given time period that you're reconciling. And what you're going to do with that statement is basically over here, you're going to match every transaction you've recorded in the accounting software with what appears in that bank record. You're going to have checks and payments. So that would be money that went out of the business that you're going to reconcile. You're going to check through all the money that went out and match all the ones that you've put in there with what actually came out of the bank account. And you're also going to match the deposits or other credits to the business, so money that you've received. So this is kind of where your accounts payable and your accounts receivable tie back in together. Checks and payments are your accounts payable that you've paid out of the business, and the deposits and other credits are going to be that accounts receivable that have come in. But you're going to need to check for errors or discrepancies and correct them in your accounting software if they do not match up. We'll talk about some examples of when this has happened to me and certainly in other businesses, that you've gone through reconciliation and there are some errors at the end. And then once you've checked everything for accuracy and things line up, then you will literally reconcile, meaning that those transactions are 100% cleared from the books. They have cleared the bank. Down here it says, though, you may need to leave the reconciliation module in order to adjust your records to be accurate. That kind of comes in that checking for errors and discrepancies section. You may actually not finish a reconciliation all in one go. You may have to leave the reconciliation module of your accounting software, back out, and change a transaction. I'll give some examples of when this has happened to me. In the end of your reconciliation, you should have a $0 difference between the records, between your online or your accounting records and the bank statement. If there is a final adjustment that needs to be made, you will record a journal entry to expense the reconciliation discrepancies account. Literally, this is an account set up in a chart of accounts specifically for when there is a discrepancy between the bank records and your accounting records. So let's get into the first example. This is going to be a reconciliation for a property management business that is one of my clients, and their accounting software is Propertyware. So for this company, I do a monthly reconciliation. It's very nice, neat, and organized, and has been since the company originated. So that's nice that there's not a lot to clean up here. What I do for this reconciliation is I download the bank records as a Quicken file, and I print a hard copy. Now let's talk about that file for a second. What is really great about online or cloud accounting software is that many of them have an opportunity or an option for you to import the bank statement. So a lot of the times bank statements are hard copies that get mailed to a business. That's kind of the default. They get a monthly statement printed out in the mail at the beginning of the next month, and that's what you can use as a hard copy to do a reconciliation. But with an online bank login, very often you can download the bank records, the bank transactions for a given time period as a file. You can do it as a CSV, which would be an Excel file, but many times they have other options. And you may not have noticed this if you're new into bookkeeping, but these files, this QFX file, is what Propertyware will accept. QuickBooks Online accepts a different type of file. But if you download that file and upload it into Propertyware, what I'm referencing here that my client uses, you can match within the program transactions that literally match, that are the same between your accounting software transactions that you've entered and what's on the bank statement. So this is kind of an easier way to do reconciliation than having to look at a piece of paper in your hand. But I will say that I still print a hard copy because I always, no matter what, have something to mark up, highlight, look back at, circle, cross through, something. And I like a hard copy for myself to kind of notate on. But you're going to enter the account balance and the date, as I said, in what you need to start a reconciliation. I'm going to upload the file and match as many as possible. Then I'm going to go through the remaining transactions. Anything that didn't directly match in that Quicken file import, and see what the discrepancies are. Just to give you an example, I have had a reconciliation recently where somehow when I was putting in the bill payment into Propertyware, when I was doing the bookkeeping side of things, I just mixed up two of the numbers, right? So let's say it was $12.67. That should be a 6 and a 7. I don't know what time of the day I did this, but I entered 1276. It's just a switch that creates a discrepancy in your reconciliation. And that's really what reconciliation is there for. It's to check and make sure that there are no errors. It's not judging you for the errors that you may have made, but it's making you double check that you're accurate. You can also make sure that you thought you paid a certain amount and that's what you entered into the accounting software, but truthfully, when you went to pay the bank bill pay, it was a different amount that was on the invoice, etc. These are ways to double check that your bookkeeping is accurate. Now, once you've gone through the remaining transactions, you've made any changes that need to be made, then you reconcile for the month and those books are closed and you move on, to your next bookkeeping period. I'm going to show you just a little bit of what this looks like through Propertyware, just so you kind of get a brief view, insight into what a reconciliation module could look like. Again, this accounting software is Propertyware, so very different from something like QuickBooks, which I'll show you here in a minute. But this screen, this tab here down below that says reconciliation, this is exactly what I go to, and literally in a hard copy, I have my bank statement printed out to the side, but you also see that place where it says upload bank statement, and that's where I go to upload that Quicken file. And what it's going to do is it's going to allow me to match these transactions down below that I've created. So you'll see here on the left-hand side, these are all of the money that was coming in. This is the money in to the account. And so what I would need to do is make sure that this bank deposit for $158 that I said came in actually did go into the bank account. And then if I know that that is accurate, I would just come over here into this little box and check that it is complete to add it into the reconciliation. And then on the right-hand side, you'll see this is the money out section. So these are all of the accounts payable that I've noted in our accounting software in the previous month. So on 11/7, I said that we made a bill payment to Colleen Exxon for $448.85. I need to go and double check my bank records to make sure and verify that that amount actually did come out of the account and select it. There have been times where I've been at this place at the very top of this the list of transactions, and we've written a check. That doesn't happen to be what this type of payment is, but I could have a check payment listed here that has not come out of the bank account. So what do? Well, you proceed because it did not come out of the bank account. You do not check it. It's not that your records aren't accurate, but that check has not cleared the bank. That check has not been deposited by the vendor or by your client. So, those are things where you may not check all of the boxes in a reconciliation. That doesn't mean that your reconciliation is not right. It means that it did not clear the bank, and that's what you're kind of really checking for. So let's move on to the second example. And this one I have to kind of laugh at myself about, because I decided instead of doing QuickBooks desktop version of reconciliation, that I would just show a QuickBooks online reconciliation. And I used my example for this as my personal bookkeeping business, which you will see I call the When I Have a Moment reconciliation, because I do not do this monthly. You can probably talk to several bookkeepers that, as clean and neat and organized as they are with their clients' books, let their own books go a little bit. So when I'm going to do my reconciliation, literally whenever I have a moment, I'm going to go online where I have my QuickBooks Online accountant login. And I'm also going to pull up my bank records in a separate tab. I use a local credit union for my bank, and I can download the QuickBooks Online file and upload it. So QuickBooks Online obviously would use the QuickBooks file type, and you would download that from your bank and then upload that into QuickBooks Online as a quicker way to reconcile, similar to the way that I was talking about with Propertyware, just a different file type. And then I'm going to reconcile in the same exact manner I talked about in the last example. But it looks a little bit different. Obviously, you'll see that this reconciliation module in QuickBooks Online, it's organized a little bit differently than in the last example. But it's still, I like this. I like that it's at the top of this screen. You weren't able to see these amounts in the previous screenshot. But in QuickBooks, it is going to show me how many payments I think I've made, how many deposits I think I've made, and the difference between what the balance I put in to QuickBooks is and what the bank statement is. So these are, importances that I want this number to be 0. I don't want these, after I reconcile, for these numbers to be different at all. And you're going to check as you are reconciling and clearing those transactions and notating that they really did come out of the bank account. So what happens if it doesn't reconcile perfectly? Let's say you've checked everything, but you're not at 0. If you end up with a difference, so that number before, let me show you again right here, this difference here is not 0, because it should be 0. There should be no difference between your accounting software and your bank account. If you end up with a difference, that's a discrepancy between the bank records and your accounting records, and you cannot find the discrepancy yourself. It's not one of those things where you just switched the numbers or you thought you paid one amount, but you actually paid a different amount. You will enter an adjustment. And, to be fair, bookkeepers don't want to do this often. You don't want this to be a routine task that happens, that you make an adjustment to your reconciliation, but it does happen. If you are a couple of cents off and you cannot find where it is, your time is better spent in just making the adjustment and moving on. And you do this by creating a journal entry expensing the reconciliation discrepancy account. Very frequently, I don't know of any accounting software that doesn't do this. When you're in that reconciliation module and you're clearing all the transactions, at the end, if that number is not 0 and you hit save and continue, or you hit save and reconcile, your program will know that you have a discrepancy and say, would you like to make an adjustment? Would you like to make a journal entry in order to reconcile? Because it won't reconcile if the difference isn't 0. So that adjustment has to be made. And you just need to put it in perspective that 3 cents, if your company, if your client's business is, is bringing in $1 million in revenue, is nothing. Okay. Let's say it's not $1 million. Let's say it's $50,000 of revenue. 3 cents is still nothing. Do you want it to happen all the time? No. Should you be wary? Yes. But there are times when a reconciliation discrepancy is okay, completely natural, normal, nothing to get too worked up over. Please make sure that you give me a thumbs up if you found that this video was helpful in understanding reconciliation, and I look forward to seeing you guys soon.